Well, good morning, CryptoCharged team. I'm so excited to have you all here with us. Love being backstage and prepping for the show here and seeing you guys already in the chat section there and getting ready and getting hyped. So today we are going to be talking about some very cool stuff in relations to technical analysis, the basics of, identifying the trend as well as some market structures. A little bit about what CryptoCharge is. If you guys are not already a CryptoCharge member and you had a friend or family member that was gracious enough to let you know that we were conducting this webinar for you guys today, we are an educational platform. So we do 5 video updates every week where we cover a little bit of fundamental news. We cover a project that you might want to know about, as well as some technicals and some other goodies. We bring guests onto our show sometimes to, keep things nice and fresh for you guys. We also have our technical analysis section where we have entries, exits, and a charts that updated pretty much every single day for you guys, so you guys can stay up to date with what we're doing, in addition to some other goodies that we'll get into at the end of the show when we do our website tour. A little bit about myself. My name is Matthew Brienen. I am a technical analyst and a partner here with CryptoCharged. I've been doing charts for about 6 years now. So I started in the foreign exchange markets and a little bit of precious metals, doing spot trading there. Learned a lot about technicals and how markets move from a very volatile market like the Forex market, which is open 24 hours a day, 5 days a week. So moving into crypto was kind of a natural move for me, especially after seeing, how much money can be made in the cryptocurrency market. So kind of became a natural fit. So we're going to be covering a few topics today, and we'll see, how far we get with all the questions and whatnot into some of these deeper topics. But we're going to be going over understanding the value of looking at time frames on charts, higher time frames versus lower time frames, and doing a top-down analysis, understanding the value of that. We're also going to be looking at how to identify trends, whether it's a uptrend or a bull trend, or it's a downtrend being a bearish trend. We'll also look at a couple different tools that we can use to help analyze a trend, being trend lines, whether it's a ascending trend line or a descending trend line. We're going over some flag patterns or some pennant patterns. And if we have time, we will also cover some head and shoulder structures, which can be a little bit trickier because a lot of these other indicators or tools are a little bit more straightforward, whereas head and shoulders can be a little bit more subjective. And takes just a little bit more practice. But that's what all of this is going to take. We're going to go through a lot of material today. We're going to take some breaks here to answer some questions. But we're going to try to teach you guys about some very key technical indicators and tools here that are going to help you guys do some of your own trading, because at the end of the day, we want to provide you guys with the information. We want to do all the heavy lifting for you with research and the technical research as well. But we really want you guys to have the fishing rod for yourself and be able to take these tools not only to the crypto market, but if you guys have interest in the stock market or the metals market or any other market, that you can just take these tools and basically copy and paste them into that market that you're interested in. So trying to provide you guys value that you can take with you into the future. So the first thing that we're really going to get into today is going to be time frames. So when we talk about time frames, there's lots of different ways you can look at charts. You can look at a chart on a weekly level. You can look at it on a daily level. You can look at it on a more granular level, like an hourly level, whether it be a 4-hour interval or a 6-hour interval or something of that nature. And we're going to kind of get into the value of a top-down analysis. So Gavin, if you could pull up my screen here, we're just going to kind of discuss a few important things. So when we're looking at a chart like Bitcoin here, so this is Bitcoin from inception. So basically, if we look all the way over here on the left side on August 15, 2011, this is from inception. And then all the way up the top here is going to be current price on January 2nd. And when we look at a trend like this, we want to look at it on a higher time frame. So when I'm in tradingview.com here and I go to the top, I can select different intervals. So right now I'm on a weekly interval. So that means that each one of these candles or little colored sticks here, I'm going to zoom in so you guys can just see one of these and see what it looks like if you're not familiar with charts at all. So whether it's a blue candle or a yellow candle, that represents 1 week worth of activity. So whether price went up, meaning one of these blue candles, or if price went down, one of these yellow candles, that gives us an idea of where price opened and where price closed and where price touched during that interval. Now, if I were to come down to a smaller interval, like let's say a 4-hour chart, now all of these little candles represent 4 hours worth of activity, what happened in a 4-hour period instead of a weekly period. So again, when we start our analysis, no matter what asset we're looking at, right? I don't care if I'm looking at Apple stock, I don't care if I'm looking at the Dow Jones, I don't care if I'm looking at Bitcoin, or if it's a brand new asset. My goal is to look at price history as far back as I possibly can, far back as humanly possible. And this kind of is the area where a lot of people get stuck, is they'll look at a very small time frame. They'll pull up on their phone and they'll look at maybe a 15-minute chart or an hour chart or even a 4-hour chart. And if you don't have that technical backing and you haven't done a lot of price action study, it's going to be very emotionally driven for you. You're going to see price move violently up or down, and it's going to look like a much bigger deal than it really is. But when you zoom out and you look at a high time frame, you're able to kind of relax a little bit, take a look at the bigger picture, understand which way the trend is going. So I like to look at a weekly chart. You can pull out to a monthly chart, but I think that for the most part, most people can start with a weekly chart, and that'll be satisfactory to understanding which way the trend is going. So when we do something called a top-down analysis, we call that because we want to start at the highest time frame possible and move our way down to a lower time frame after we've made our evaluations of what price is doing on a higher time frame. So ideally, this is the order I'd like you guys to look at charts. And we would start looking at the weekly chart, then we would come down to the daily chart. After we're done with the daily chart, you can move down to a time frame that you like, maybe a 20-hour chart or a 12-hour chart or a 4 or 6-hour chart. But we shouldn't start by looking at a small time frame like a 4-hour or a 6-hour and then moving backwards or upwards, because that's going to skew our vision of what's really happening here. So as far as top-down analysis, the first thing we want to do is identify the trend. So when we're looking at a trend, and there's only two types of trends, right? Other than trading sideways, there's an uptrend and there's a downtrend. And in an uptrend, we want to see a series of something called higher highs and higher lows. And we're going to go ahead and look at an example of what that looks like here on Bitcoin on this weekly chart. So when we have our first section here and we look at where price started, we can consider this the low. So we're going to put the word low right here. One second, low. Okay, and that's going to be this area right here. We're going to go ahead and just circle that for you. So this will be the low right here in green. And when price moves up and it makes a new high, this will be the high, okay? Without knowing that this is a full, trend, whether it be bullish or bearish, we know that this is the low over here and this is the high. Now, after you make a high, price never moves straight up in one direction. Price will pull backwards, and then that's healthy in an uptrend, because the next thing that we want to see here after we make a high is a low, but we want to see that low made at a higher rate than the previous low. So this will be considered a higher low. I almost flipped you guys around there, higher low. So this over here will be the high. Let me correct this for you guys so we don't get all backwards here. So we have the low, we have the high that was made, and then we have a pullback and it's a higher low. And what I mean by that is if we take our horizontal ray here and we see that the initial low over here, this low that was set is higher than the initial low that was set. And that means that our uptrend is intact, right? And we want to continue to see these as we move our way up here. So we're going to grab this. And now this high over here is a higher high than this high that was set over here. So high, higher high, and what we'd be looking for after a higher high is again a higher low, which we can see happened right here. So after price pulled back, this low that was set over here is higher than this low that was set over here and higher than the initial low that was set here. So when we're looking at an uptrend, we want to see this sequence continue all the way up. And when we look at a macro view of what's happening with Bitcoin here, and we look and we pull out and we see, okay, we're on this weekly chart, so we know that each one of these candles is worth 1 week's worth of activity, we can see that we continue to make higher highs and higher lows. So although we can see big corrections in price, and I mean really big corrections in price, where we see, price move up, let's see, from this higher low up over, 10,000% up, and then price pulls back almost 84% to the downside. So when we're in these moments, right, when we look at this area right here from the 2017, 2018 high that was set at almost $20,000, and we see the low that was set here at roughly $3,000, this for most people, especially with Bitcoin being a relatively new asset, most people said, all right, that's it. That's over. It's over for Bitcoin. We made our high, the bubble has popped, that's that. But the reality is when you zoom out and you look at this on a weekly time frame, price continues to make higher highs and higher lows. So although $3,000 was not a very comfortable price for price to pull back to after making a high of $20,000. If we look at the high that was made over here in 2013 at roughly almost $1,200, and we see the pullback to the low that was set at $156, again, the knockback here was about 85%. Overall, the trend is still intact. We're still making on a macro level a series of higher highs and higher lows. So for those of you who are interested in just doing a buy and hold method, you want to just see where price goes in the future, the goal will be to obviously identify where the highs are, right? We don't want to be buying an asset while it's doing something like this, right? We don't want to buy this piece of price action right here while price is rocketing its way up, but we want to see price pull back. And while price is pulling back and making that higher low, we ideally would like to accumulate in those areas where price is at a higher low. So are we getting in at the very bottom of every asset? No. Are we going to sell the top, the dead top of every single asset? Absolutely not. And once you remove that expectation from yourself, this investing in cryptocurrency is going to be a lot more relaxing and a lot more enjoyable for most of you. But when we look for on a macro level, where could price potentially pull back to in relations to a higher low, it gives us a more comfortable area to re-enter the market. So for those of you who aren't with us here at CryptoCharged regularly, Monday through Friday, we look at these charts and we look for opportunities on a smaller time frame for you guys to be able to enter the market or to be able to add to your positions, to be able to increase your holdings. And we always want to do that at a higher low. And if we don't get the opportunity for a higher low, we want to make sure that we're buying as far away from the high of that asset as humanly possible. Okay, so we're going to go ahead and drop down to a smaller time frame here just to show you guys what a downtrend is consisted of. And I'm just going to zoom in here. I always keep my charts off auto just because it irritates the heck out of me while I'm while I'm trying to look at a very particular piece of price action. But again, we're just going to look at a smaller time frame here, and we're going to look at what a downtrend looks like. So although the overall macro trend is up, I think we're all in agreement that the trend is up. We can see obviously within those, while price is making a lower high, a downtrend that comes into play. So that's the opposite of when we have made a high up here, not higher, high. So we made our high up here. So for example, what we're looking at in this relation to this piece of price action is the high that was made at roughly $69,000. And then we would look to see a low that was set. So then we'll see a low set over here. All right. And then when we've set the low, when we come back, what's going to start confirming that we're in a downtrend is we're going to see a lower high. So instead of seeing a higher low, the high that was made after setting this low over here, so this low that was set right here, we see a high that was lower than the previous high. And this is how we know that a downtrend is starting. So again, we're going to see the same thing start over and over again. And instead of seeing, we're going to keep setting lower lows. So lower low. And this is what makes up a downtrend. So again, when we're looking at an uptrend, we're looking for a series of higher highs and higher lows. And a downtrend, we're looking for a series of lower highs and lower lows. And until that trend or that pattern is broken, your anticipation of a trend is that that trend will continue until you see a violation of that trend or that trend dramatically changes, to which you would look for a pullback in the direction that you think the breakout is happening in, and you can place a trade accordingly. So in this instance here, we continue to make lower highs, lower lows, right? And if we look here, we had our big capitulative move here that happened on December 3rd, where we came all the way down to, $41,000, $42,000. And now we finally found a floor of support here, right? So I'm going to actually grab a little horizontal ray for you here. So we can see that we found some support in this area. So price isn't really trending down so much anymore, right? So we haven't had this big confirmation that this trend is finished, right? Because we made a series of lower highs, lower lows, lower highs, lower lows. Right here, we can see the final lower low that was set over here. Now we've been accumulating in this range here. And what's going to tell us that this range is over is when we break above this range and we start making a series of higher highs and higher lows again. So again, is this first pop that we saw here above $52,000, does that mean that the downtrend is over? No. So we made a higher high, but we weren't able to make a higher low. So we can see that right here on December 27th, that we made a higher high, But when we came back, we weren't able to make a higher low somewhere over in this region. We instead came back to retest the lows that were already here. So in this instance, the trend appears like we could potentially see some sort of reversal pattern. However, it's likely that we need to break above this with more tenacity, right? So we want to see a breakout above the zone. We'd want to see a pullback, which would be a lower high, higher low. And then we want to see more highs being made in order for this reversal to be confirmed and say, okay, we're good to go. We're out of the weeds on this downtrend. Okay. So right now we're on a 6-hour chart. Earlier we were on a weekly chart. So you can find these trends no matter how big or how small of a time frame you're on. But when you're looking at an overall investment standpoint of should I invest in Bitcoin? What is the overall trend? We want to start on a weekly time frame or a daily time frame and then work our way down to one of these smaller time frames to identify some opportunities and areas of interest where we could potentially enter off of a trend reversal. So we're going to go over some different tools that you can potentially use to help you identify when a trend is maybe going to be over or if a trend is continued to be intact. And we're going to go over some trend lines. So if you guys have some questions about what we've already talked about, go ahead and drop them in the chat here so that we can all be on board with everything that's going on here. I'm going to take a quick drink of water. Perfect. I appreciate all the love you guys have been showing in the chat, honestly. And I'm really glad that you guys have chosen to spend your Sunday morning here. And we're going to look at some other tools here. And the next tool that we're going to look at is going to be trend lines. So when we talk about trend lines in any technical indicator can be somewhat subjective, right? So when we talk about a trend line, we talk about a moving average, we talk about, support and resistance. They all can be violated and invalidated at the end of the day. But when you find one that is on a more macro level, meaning a higher time frame, meaning above a 4-hour time frame, above, a 6-hour time frame, or somewhere, in those higher time frames, you can put a little bit more weight on those indicators. And that's really what I want you guys to take away from all of this trend analysis is that the higher that you see, the higher the time frame you see any of these things on, whether it's a trend forming or a pattern forming or a trend line forming or whatever you think you might see forming, the higher the time frame that you see it on, the more valid and valuable that indicator or that trend is going to be for your long-term investing. Now, obviously, you can make some good money by playing some of these bounces on these short-term trends, but for the most part, you want to be looking at higher time frames. Once you feel very comfortable in those high time frames, you can start to move down and get a little bit more intimate with these smaller time frames because it's going to become a lot less scary for you overall. So we're going to start actually with the descending trend line because we already have a beautiful downtrend here that formed again from November 9, and we're going to talk about the break of that structure. And we're going to go over descending trend lines, and then we're going to look at an example of an ascending trend line and what happens when those are violated and what kind of signals those give to either bulls or bears that they could potentially take a trade in one direction or another. So for those of you who have been with us at CryptoCharged, we've been discussing most recently this trend line here that was forming for a few weeks. And when we form a trend line, we want to have multiple touches on that trend line to confirm that the trend line is valid. So most analysts will agree that you need 3 touches on a trend line for it to be a valid trend line. Now, are you going to wait until that third point forms, or are you going to draw it when you have at least 2 points? For me, I obviously want to toss it on there when I think that I have a couple solid points, whether it's a lower low and a lower high, or I have a higher high and a higher low forming, and I think that there might be a trend forming. I can go ahead and throw a trend line on there and see if price is going to respect that trend line or if it's going to violate that trend line and the trend will, change in direction. So when we drew this trend line just now, this big black trend line, we can see how many examples where price intersected this trend line and had a difficult time getting above it. So we can see right here at 69,000 was the high that was set. We can see that we set a lower high right here on November 14th. That's $66,000. We saw that we had a lot of rejection. We came back and tested this twice here through a couple wicks over here and set another lower high at 58,000. Came down, did a lot more selling. We had that huge, nasty capitulation wick that happened on December 3rd, where price came all the way down to roughly $42,000. We pulled back And when we came up to this area here, late December, December 21st, December 22nd, we encountered this trend line one more time through a bunch of wicks up above it and then rejected before we had this initial breakout. So we could see from this trend line, so even if we didn't have all this other price action down here, is that once we had this third touch here on November 30th, so we had the first intersection, we had the second intersection, and we had the third intersection, we could say with relative confidence that this trend line is a valid trend line. And if this valid trend line is broken to the upside with a lot of volume and a lot of tenacity, then we can say, well, hey, maybe this downtrend is not going to continue in this aggressive way. Maybe we're going to see a reversal in trend. And obviously we want to look at this with a confluence of other things, right? We're on a 6-hour time frame again, so we would want to compare and look at our daily chart and our weekly chart and say, okay, are we looking at a big enough portion of the trend? Does this trend line matter to the more macro trend? But when we're just talking about trend lines, we can use them as tools and indicators. Are we on track to continue the trend that's already intact, or is this trend going to be violated and reversed? So I'm going to take away these little touches here. And when we look and analyze price a little bit here, we can see that there was a clean, huge break of this trend line, right? So we came up, we had a big aggressive breakout. We came out back, set a lower high, and then set another higher high over here on December 27th. However, price broke back down. And for a lot of traders, especially when they saw the sell-off here, even though they saw that this trend line was broken, most everybody on the internet, most analysts saw that this breakout here and they go, okay, great. So the downtrend that we saw was broken and there's some sort of breakout underway. Now, a lot of retail traders saw this sell-off here that happened from $52,000 and we came all the way down to, $46,000, $47,000, basically right back to where we were when price broke out initially. We can see that, we kind of created some support on top of this trend line. And that's what you want to see when you see a breakout. A lot of people forget that you want to come back and retest that breakout zone or the area that was serving as resistance. So this black line was serving as an area of resistance, meaning that price was unable to break above and make higher highs. It was acting as an area where price was unable to get above. And you want to see that area or that trend line or that indicator then turn to an area of support or a indicator of support. And that's what we're seeing here right now. Now, is this going to be the exact bottom? I sure hope so. But what we can see here is that there's a lot of consolidation and multiple tests. I'm going to zoom in for you guys here of this trend line on the backside. So once we broke above, right, we came back down, but we can see that price had a difficult time closing and really breaking back down below this trend line again, which is a very positive sign, right? So again, when we look at a confluence of things, we can't just look at trend lines and say, okay, well, this is what price is going to do next. We have to look at where areas of support are coming in. But we can see that price is generally holding this, $46,000 level as a strong area of support. We see that we broke through this descending trend line here, came back, retested multiple times with a lot of difficulty of breaking back down below, which is a very bullish sign. It shows that there's demand coming in here in the market. And now we're holding this level strongly as support. So again, do we need to continue to make a higher highs and higher lows in order to see the uptrend continue? 100%. We need to see a lot more volume come in. But when we use these trend lines in conjunction with support and in the overall macro trend, it gives us a much better indicator of what price might be doing next. Okay. So now let's look at a situation where price is in an ascending trend line or an uptrend. I'm going to pull out to the 20-hour time frame here just so I can show you guys a pretty clear uptrend. So when we had our initial, I'm going to take you guys back in time a little bit here. Let's go out to a daily time frame here. So when we look at all the price action that happened from earlier this year, right? From in 2021. Happy New Year, by the way, everybody. So when we look at the price action that happened from, even from February all the way through May, prices were very, very high. Prices were trading between, $45,000 and $64,000. We had a very big range where there was a lot of selling going on here. But prices remained pretty consistent through here until we broke this trend down and we saw this big breakdown from, almost 64K all the way down to set our low here at $28,000. Now, once we created this bottoming structure, kind of what we're seeing now, right? Some sideways accumulation, the initial break in trend, some more sideways continuation. After that consolidation, that accumulation phase is done, we saw this big rally to the upside. And once we made our first higher low over here in September, we can say, okay, well, now we've got a trend going on. So even if we didn't have the rest of this, we could have taken this point here to this point here, so that we have, okay, 1, 2, 3 touches. It's a valid trend line, right? And this is an uptrend. It's very obvious. When you look at price from left to right, don't try to overcomplicate it. You want to be as objective as possible when you're looking at a trend. If the trend is up, the trend should likely continue up unless you see something change in the actual structure of the trend. And until that happens, your expectation should always be the trend is going to continue in this direction. So if we continue to drag this trend line up, we can see that we actually had another bounce here on November 29th. And again, I'm just going to highlight the touches here for you. So we got 1, we got 2, we got 3. That was not very good right there. 3. And then we had 4 here. And when price came back up, this looked like it would be a valid balance. We thought maybe we're going to go much higher. But once we had a big candle close and violate this area here, that uptrend was done. This piece of price action here that started from July 20th was validated on September 20th, validated again on September 29th, validated again on November 30th. All that trend should and was very much intact until we had this break of structure in early December and started trading sideways. Okay. Now, some of these trend lines, especially these macro trend lines like we're looking at here, so we're looking at a fairly large piece of price action, right? From July all the way through current price through the end of 2021, we can say this is a fairly large piece of price action. So you could actually leave some of these trend lines intact, just like we saw with the other example of the downtrend that was in play on the 6-hour chart that got broken to the upside and then retested. We can see that through this example here, where we had this break of structure, that we would be looking for essentially, obviously, continuation to the downside is more likely because we did break structure. But the bullish case or the upside case here would be that price comes back up to this trend line, and instead of rejecting it, it reclaims this trend line as support, and then price can move much, much higher. Now, are we going to get all the way back up to those targets that we initially anticipated in the $70,000, $75,000 range? You know, that's really to be determined to see if we're able to get up over those milestones that we're talking about at, 53,000, 55,000, 57,000, 62,000. So, there's a lot of overhead resistance for us to get to those higher prices. But when we talk about market structures, a break in structure, a confirmation of structure, these are the type of things that we're talking about. Okay. So if you guys have any questions on trend lines as is, go ahead and drop them there. Otherwise, we're going to just take a quick water break, and then we're going to look at another very important structure. So again, guys, with all this stuff, it just comes practice, right? So when you look at the stuff first time around, it can be a little overwhelming. It looks like you don't know how to do this. You couldn't do this. I could never do this on my own. But the reality is, everything takes practice. If you're a mortgage officer or a real estate agent, if you think about the amount of training that you guys had to do just to get your license or even be able to qualify to take your license, right? It's a lot of hours of actually, doing all that education. Once you're done with the education, then you have to really study for the exam. Once you pass the exam, then you got to go find a broker to sign up with. You find that broker, then you have to, spend time learning how to actually do your business and learn about what real estate's made of. And then, that after you spend some time actually doing those activities every single day, all of that becomes second nature to you. Real estate becomes easy. Mortgage becomes easy. All of these things become a lot easier for you. But initially, those things were really difficult and very difficult concepts for you to grasp, most likely. But the reality was, you knew that there was a reward at the end of that you wanted to get to, and you knew that by learning the skill set and learning that industry and learning that set of skills was going to help you get to where you want to go. And you should look at it the same way with technical analysis and investing, because again, when you can take the control into your own hands and you are the person who does your own analytics and you do your own charting and you can make your own analysis of what you think might happen to an asset or security or a coin, that is a very powerful combination. So I really want you guys to consider investing some time in 2022 into yourselves and into your education with not just technical analysis, but as cryptocurrency as a whole, because the more you learn about something, the more you crave that knowledge, and the more you crave it, the more you're going to satiate it, and you can create that positive cycle for yourself this year. So I would really encourage you guys to take advantage of that. Makeup Central, when is the CryptoCharged merch coming? Water bottles. Yeah. We have a bunch of merch that's coming right now. It's all locked up on the supply chain. We ordered them, I want to say in November, and they still haven't arrived in Long Beach yet. So as soon as that merch is available, we'll have that out to you guys. Okay. So let's look at our next technical structure. It's going to be the flag and pennant structure. So again, when we talk about trend lines, we were talking about continuation or reversal based on the validation or the rejection of that structure. We're talking about flags and pennant structures. Those are, again, going to be most likely continuation patterns. So let's take a look and let's see if we can find some solid patterns in here for you guys to look at. So let's come down to a smaller time frame, like a 4-hour chart. Again, the higher the time frame, the more valid a structure is, but we're going to simply look at some structures here so you guys can better understand what I'm talking about when I talk about flags and pennant patterns. So again, let's take this same uptrend, but we're going to look at it from a smaller time frame. So we're going to look at this from July 20th, and we'll even take this out to, we'll say that the most piece of price action we're going to look at is up to like August here, right? Okay, so from July to August, that's roughly the piece of price action that we're going to study right now. So flags and pennant patterns can happen in a lot of different ways. And they can be ugly, they can be very obvious, they can be symmetrical, they can be asymmetrical. So understanding them and identifying them at first is going to be a little bit difficult because you're going to be looking for a very textbook pattern, and that's what you should be doing when you're learning how to identify these different structures. But the reality is, you know, bull flags can go upwards, they can go downwards, and they can also trade sideways. And all three of those can be technically a pennant or a flag pattern. Okay, so when we look at what price is doing, we can look at it in a series of flags and poles, especially when we're in an uptrend. Okay, so a pole is considered an extension. So when we see price do something like this, right, we see price fire up very strongly without offering a lot of pullbacks, we can consider that the pole. And I'm just going to go ahead and actually just write out for you guys, flag pole. Okay, sorry, my mic is sitting right on top of my keyboard, so I'm knocking everything around. So this would be considered the flagpole right here. So you can see how strongly price moved up. And then when price found some resistance and it said, okay, well, we need to offer some sort of selling pressure here. Let's actually come down to a smaller time frame. Let's come down to a 2-hour time frame. I'm going to pull this up because I want you guys to see this flag pattern a little bit more clearly here. Lost my price action. Okay, boom, here it is. So we see price move up very, very violently, very quickly. This is very exciting, right? But then after price moves up in this flagpole pattern, we can see a flag form. So when we see something like this form, so again, it's a series of trend lines, and we see some sort of overhead resistance form here, we can see a flag pattern form. So again, it literally looks like a flagpole popping up out of the ground, right? Because in an uptrend, we want to see a flag pop up, and then we want to see some sort of consolidation or sideways chopping pattern that happens. And this is a continuation pattern, right? So again, I could take this here and this would still be a valid flag pattern here. You know, if I had seen this price action before, I probably would have pulled it out to here. Give or take, it still would have been valid, but this last capitulative move would have faked everyone out and convinced them that price was not going to go higher. But this is what we want to see when we see a bullish trend that's very much intact, is that we'll see a impulse move to the upside being this flagpole. So an extension or an impulse move. We call it an impulse move because price impulsively wants to move in that direction. And that's the direction that the trend is set in. So we see the impulse move, and then we see some sort of consolidation period here. So again, if we measure this up, this was a 37% move, excellent, huge move on Bitcoin. Then we saw the first pullback that was roughly a 10% pullback. We saw price pull up a little bit, consolidate back. So that's the kind of price action that you want to see in a healthy uptrend, is you want to see nice pulls and offers of selling opportunities. When you see price standing up straight on itself, that is not the opportunity to enter. That's not the market that you want to be entering. You want to see some sort of significant pullback in the market before you consider opening a long position in the market, because that is what the market makers want you to do. So again, just taking a step back from the structures here. When we look at these markets, they represent buying and selling, right? So all these blue candles mean that there's a lot of buying going on and prices going up in a very fast manner. And we see big yellow candles, and in your case, they might be red candles. We know that there's a lot of selling pressure coming into play here. Now, this doesn't mean that you and I and everybody else in the world are exchanging Bitcoin for dollars directly, right? So I'm not selling my Bitcoin to somebody, you know, across the world directly. what I'm doing is I'm essentially selling my position to the market maker. So when I talk about market makers, we're talking about Coinbase, we're talking about Kraken, we're talking about Robinhood. It doesn't matter what exchange you're considering, those people are market makers. And they essentially provide liquidity to the market. Because if I want to sell Bitcoin right now, right? Let's say I see Bitcoin up here at $40,000. I bought it at $30,000. Maybe I want to take some profits and I want to sell my Bitcoin at a higher price. Now, if there wasn't a market maker in between us, I would have to wait for somebody to come along with the cash and be willing to buy my Bitcoin from me at that exact moment for that exact price. And that would just create basically a zero liquidity market. It wouldn't make any sense. Nobody would get any sort of trading done. So in order for this to happen, you need to have like an intermediary person or a middleman that helps create liquidity and allows you to sell your assets at any price so that they can essentially sell those positions to someone later. So when you see price standing up like it's like this is right here, right? So we see all these huge blue candles. That is the wrong time to enter this market. You want to let price settle out like this. You want to see price consolidate a bit, and then you can say, okay, price is most likely going to move higher now that we've consolidated a bit. And bull flags are one of those areas where you can see some consolidation and see some further upside, because we saw after this bull flag was finished, we actually did get another impulse up of about 10% before seeing further consolidation and the trend continue further to the upside. So again, structures are not a zero sum game, right? Just like with any indicator and any technical analysis we do, there's no such thing as zero sum or a black and white binary. This is exactly the way that it works out every single time. Trading and technical analysis is a series of probabilities, and that's really true of all investing. Even if we look at something outside of cryptocurrencies, we look at something like the stock market or equities or any other market. Those financial advisors, even though they have Series 7s and all these other licensings, they're still doing the same exact thing. They're looking at a series of probabilities and placing their bets accordingly. They want to reduce and mitigate as much risk as humanly possible, and they want to maximize and extract as much as they can at higher prices. And you should be doing the same. And the way they do that is obviously they do fundamental analysis, and that's studying the project and understanding what it is, who's behind this, what's the value of this project. Is this something worth even getting involved with, regardless of what the technicals say? And if the answer to that is yes, then they can move forward with technicals and say, okay, what is a good entry for this? Where are we going to mitigate and lower our risk enough? And where can we potentially enter this market? So everybody out there is doing the same exact thing, right? Everybody is looking for confirmation. They're looking for confidence that the market is going to continue in one direction. They want to know that they're not going to buy the top and have to sell the bottom, or vice versa. So that's kind of the meat and potatoes of what we do with technical analysis. Is we want to find trends that are already in motion. We want to join that trend, right? So my goal here is, again, you can take short positions in a market, meaning that you can sell a market or place a bet that the market's going to go down, and you will be rewarded if the market goes down. And of course, if the market goes up, you'll lose money and eventually have to close your position if price climbs up a little bit too high. So we always want to join a trend that's already in progress. So again, when we see price like this over here, and we saw it trading sideways, and we see a little bit of downward price action. If you're accumulating and you just want to add Bitcoin to your bag constantly, and you want to just get as much Bitcoin as you can, you're more concerned about what happens in the next 5 to 10 years, that's perfectly fine. But if you're looking to kind of capitalize on this volatility, you want to find a trend that's already in motion and join it at an opportune time. Now, I want to make sure that you guys understand that doesn't mean I'm telling you guys we need to time the markets, because timing the markets is nearly impossible. You should be trying to average down and then sell out as well in chunks to make sure that you're maximizing both sides of this. You can interview any analyst that you want to. You could talk to Kathy Wood. You could talk to anybody out there. They have price targets, but at the end of the day, nobody ever times the perfect bottom and the perfect top. Now, some people buy near the bottom. Some people sell almost the exact top. But the reality is almost nobody buys the dead bottom and the dead top. So we want to find a trend that's in motion. We want to join it. So in this case, when we saw the initial up move and we saw this consolidation here, and then we saw this big pullback here, this would have been the opportunity right here. And again, everything's in hindsight 2020, but we can see that here, this was an area of support. Even up here, this was an area of support, would have been a great area to enter here. So when we see a trend that's in motion, we see a big pullback or a higher low that's formed here, we would want to join that trend that's already in motion. So in this instance, entering somewhere right under $40,000 would have been an optimal entry for you guys to join this trend. And in fact, if you guys were following us earlier, back in the summer, we were doing a live show right around this time when price was pulled back, and we were talking about some Elliott wave corrections. And I had suggested that you guys could potentially take an entry right around 39,500. And if we look at where that is, we can see that we saw price pull back to 39,500 just sharply here before rallying really, really hard. And that's because, again, we wanted to be a part of a trend that was already confirmed. So when you see these flag pulls and these extension moves pull up, it doesn't mean that you missed the move. Now, it means that you should be cautious and take a step back and think, okay, I want to be a part of this trend, which is fine. And again, this happens with assets that are very hyped up. If we look at AMC, GameStop, Shiba Inu, Doge, right? All of those stocks or coins or assets look very, very enticing when price is moving up like that. But what you need to wait for if you want to join that trend, whether you agree with it or not, right? If you're just looking at this from a pure technical standpoint, is you need to wait for a higher low to form to confirm that that trend is going to continue and that price is not going to just completely reverse on you and essentially pull the rug out from underneath you. And that's happened to a lot of you guys. And it's happened to me too. I've joined trends that were overextended already and I didn't wait for a pullback. And next thing you know, you're minus 30%, minus 40%, minus 50% on your entry. And you're kicking yourself and you go, dang. Now, when you look back on the chart, you go, okay, that was pretty obvious that there was going to be some sort of pullback. So again, using some of this price action theory in conjunction with like Fibonacci's, for example, we've covered in our previous masterclass, the Fibonacci masterclass. And that is a wonderful, wonderful tool that will not only tell you some potential areas where price is likely to pull back to, but will also produce extensions. And those extensions will tell you where price is likely to go or where you can potentially look to take some profits within that trend. So again, trading, technical analysis, it's all a confluence of things. We don't want to look at just the flag pull and the flag and say, okay, let's enter. We want to look at where is a good area of support? Where is price finding support? What do the Fibonacci say? Where are the Fibonacci tools telling us that is a good place to potentially enter? Have we mitigated enough risk by entering this market at a lower high? Okay. So when we look at these flag patterns, they can happen in both ways too, right? So I'm going to take away the word flag pull here, but you guys are going to remember that this is the flag pull. And we can look at these flag pulls in the opposite direction. So this would be a bull flag because price is moving upwards, and the consolidation and the flagging pattern that just chopped sideways like this that you guys can see, it happened while price was moving upwards. If I flip this chart upside down using Alt-I and basically make this a downtrend, this would be considered a bear flag, and that would be an indication that price is likely to decline further. So when we're looking at these indicators, you don't want to look at, price and try to make it fit your narrative, right? So let's say that you're long or you've bought a position in Bitcoin and you think, okay, I think Bitcoin's going to go up. You don't want to look at these structures and try to draw and compress a structure that's going to fit your narrative or your bias or the way that you are trading with the trend. You want to make sure that you're objectively analyzing this market as much as you possibly can to be able to identify greater opportunity. So in this instance, right, let's say this chart was going down and this was a downtrend that was intact, and I saw this bear flag forming here. What would be the next likely thing to occur? More selling pressure. And that's what you should anticipate, is that there should be more selling pressure from that continuation pattern. So, and the reason that could be helpful for you is if you see a downtrend, you see a bear flag forming, that means, hey, foot off the gas. It means that there's most likely going to be a more advantageous buying opportunity if you are just a little bit more patient. So again, with these pennant patterns, there's a lot of different ways you can measure them. Some people like to measure the mouth of this pennant here and say, okay, this is 11%. So from, roughly the middle of this pattern, I can expect another 11% to the downside. In this instance, we would have gotten it, but we would have had to wait for price to come all the way, back up and then back down. But you should always expect some sort of continuation from those trends. Okay. Makeup Central are the pennants for long-term positions. You can use, again, these pennants, you can find them on larger time frames, you can find them on smaller time frames. Let's pull out to a larger time frame here. So technically on this daily chart right here, what do we have? So let's look at this here. So from December 11th, 2020 to January 8th, we saw a huge impulsive move up, right? So we got our pull flag there. And then what do we have occur right here? We had a huge pennant that formed before price offered even more rocket fuel to the upside, right? So we had our flagpole, we had our bull flag that formed here, and then after that flagpole was finished, boom, another huge extension to the upside of almost 100%. Okay, so when we look at these, we can look at this on high time frames too, especially when you see a bull flag forming on a high time frame like this. Again, that's a much more valuable indicator than something on a 4-hour chart, a 6-hour chart, a 2-hour chart. Anything on the lower end of the spectrum is going to become less valuable to you. Whereas something where we're looking at like a daily chart or a weekly chart, if you see, you know, these types of pennants forming there, that's going to give you a lot more confidence that, hey, it might take a while for this structure to complete, but I know that I'm being a part of a larger structure that's going to produce a much larger move. And again, when we look at where price finished at the end of this pattern here, price moved up almost 100%. It moved up 95% from the completion of that pennant pattern there. And you can see all these wicks that came in here, right here, another one on January 11th. We saw one almost touch on the 28th. We saw a quick violation here on January 22nd. We saw another respect of it here. So, you know, these pennants can get messy as well. You'll see wicks and candles push themselves just outside the candle to get traders to go long or short in the opposite direction, and the market makers will pull it back in the original direction. So you need to be very careful of that. And again, when you're paying attention to which way the trend is going from a more macro perspective, right? And again, we can see from, in this instance, in December of 2020, the trend was clearly up. So when we see that pattern form and we see that pattern start to getting close to the edge of that wedge pattern, the more tightly it gets compressed, the more explosive that pattern generally ends up being. So you should always expect more upside. So again, if I were to flip this chart upside down, the expectation should be that, okay, we saw this huge downward move. We see consolidation to the upside. What should be the next move we expect after consolidation to the upside? More selling pressure, which in this case would have been very much true. Now, again, there's many instances where these structures and patterns can be invalidated. So we always want to pull out to larger time frames, you know, right? Like, so we want to look at the weekly time frames. We want to see what's happening on those weekly charts. And let's go ahead and look at another example here, actually on this weekly chart. So we can look at an even larger piece of price action, right? So we can see this weekly chart has been going up here from the low that was set on the 2015 here. So February 2015, and this is a high all the way from December 2017. So price actually took a very long time to climb up here. But if we're looking at this from a very macro perspective, what do we see here? We see one big, enormous, huge flagpole. And what do we see here? A very big pennant patterns here. So although this took a very long time to play out, this was a huge bull flag that was forming here. And a lot of people don't consider that because they go, okay, well, price rose from, you know, 12,000, almost 13,000% from the 2015 low that was set in January to the 2018 cycle that was set up here in at almost $20,000. And this bull flag, although it took us all the way down to $3,000, this technically was a huge continuation pattern on the weekly time frame. So when you look at a very macro chart, and if you're going to be a very macro investor, meaning you don't care about what happens this year or even next year, and you just want to look at the macro trend, you could very well just focus on accumulating anywhere inside of this bull flag here, and then wait for the next explosive move to the upside. So again, if we look at this from a macro perspective, what's been forming here since 2019? One huge flagpole, right? That's essentially what's been forming here. And at the top here, we're getting some sort of bull flag that's forming. So is this bull flag going to be valid up here? Is this going to be the thing that takes us out to $100,000? We will have to see. But this is what I'm getting at with bull flags. So bull flags can come downwards like this, they can come upwards like this, and they can also trade sideways. Okay, perfect. So I hope some of this is clicking for you guys a little bit. Again, if you guys practice this on your own charts, pick an asset that you like, whether it's a crypto coin or if it's a stock that you really like. You can do this on any asset class and you can study it. You can pull out to a large time frame. identify the trend, see which way it's going, try to see if you can find areas where price offers selling or re-entry opportunities, and see if that asset looks like it's going to give a re-entry opportunity in the near future. And the more examples you give yourself of this, the more times you do things like this, it's going to give you a much better idea of what price is doing. And this is price action theory. So a lot of people trade this way. A lot of people like to put a lot of indicators on their charts. That's fine. And as a technical analyst, I've explored a lot of tools. I've explored probably over 30 different indicators out there, and there's a lot of stuff that's very helpful to a lot of analysts. A lot of people like to use moving averages. A lot of people like to use stochastics. A lot of people like to use RSI, and I use those things sometimes, especially the RSI. And sometimes I'll put some moving averages on my charts. But what I've found in my several years of chart experience now is that when you look at price action in this way, and you look at it in more of a series of ebbs and flows and structures that come in with, corrective structures that come in within the trend, you're able to kind of take some of that stress out of relying on every single indicator to tell you what price is going to do next. And instead, you're really just evaluating, how is price trending, and how do I become a part of this trend? Because again, for those of you who are brand new, you maybe don't want to be involved in margin trading or futures contracts, but the reality is you don't have to wait for the trend to go up to make money. If you see an opportunity where price is trending down and there's a clear downtrend forming, you can wait for pullbacks to the upside and then open a short position, which again means that you're betting that price is going to go down, and be compensated greatly if price does go down and continues in that fashion. Now, of course, there's risk associated with that. You need to make sure you're setting a stop loss, make sure you understand a lot of these technical indicators, study support and resistance, understand where price is within that moment. But the reality is you can make money no matter which way the market is going. And that's true of stocks as well. If you're willing to learn a little bit about options and understand that you're able to make money if price goes down, you're a little less emotionally involved in what the chart is doing, because you're not concerned, is price going up, is price going down? You're concerned about which way is the overall trend going and how can I be a part of this trend. So I know that I've reiterated this a few times, but your goal is to be associated with the existing trend, because who is making most of this happen here, right? So if we look at this move that happened from 2015 all the way up to 2017, who made this happen here? This 12,000% move. You and I didn't make this happen. Me, you, your neighbor Bob didn't. Even your millionaire boss didn't make this happen. Even if you put $1 million into this market, you still would not make this chart move in this way. The only people making this chart truly move in this way are banks, institutions, and horribly wealthy people. And I mean people who have billions and billions and billions of dollars. And those are the people that move this market. And once you kind of take away the idea that it's retail traders, people like you and me, that make up this market, and it's banks and institutions, you understand that you need to pay attention to what the smart money is doing and what the big players are doing with their money, so that you can ride the waves with them, right? You don't want to trade against banks. As much as I hate every bank in this, in this country, I would never ever try to bet against the banks. I will not bet against those types of organizations, because they are the people who control these markets. They're the people that move these markets. Okay. So I have one other structure that we could potentially go over, but if you guys have some questions about what we've covered already, or something else that you maybe have seen on stream that we've covered structurally wise that you would like us to do a little bit more analysis on, we could cover that, but we will be doing some head and shoulder pattern in just a minute here. Additionally, if you guys are not part of CryptoCharged, or if you are part of CryptoCharged, make sure you guys are checking out our Learning Center, because in our Learning Center, we have so many resources in there. I personally took care of most of our technical analysis section. Dan Habib, one of our partners, also did a lot of great lessons in there. But we have a lot of these tutorials on how to follow these patterns, how these patterns work, why we pay attention to them. We show you other indicators and other things that we look at to help us kind of look at these things in confluence of other things, and helps us make just better decisions about our investing. Because at the end of the day, the reason you guys are interested in this, because you want to become your own self-directed investor, right? You want to be able to do this on your own. You don't want to pay the boys over at Merrill Lynch, a 2% performance fee plus all other kinds of trading fees just to manage the stuff for you. If you can just, take care of this yourself, and you can, everybody can do this. I'm 28 years old. I started learning how to do technical trading on a secondhand laptop that was riddled with viruses. I would get up before work. I would just practice my charts, play some of my, practice trades, come back after work, see how they played out, do more charting before I went to bed. And I, obviously got more time, as time went on, and, didn't have to work two jobs, and got better equipment. But, you don't have to be the guy with 7 monitors learning how to do this. You don't have to have any fancy software. TradingView.com is free. And if you want the pro membership, so you can have some other features, it's like $12 a month. Well worth it. So I would really encourage you guys to consider taking some time in 2022 to learn some of this stuff. Bitcoin have any bear flags thus far? Yeah. So technically, again, when we look on smaller time frames, so on a macro chart, we're only making higher highs, higher lows. We're continuing to make bull flags all the way up. But again, if we come down and we look at like a 6-hour time frame, and we pull this chart back out here, there's lots of instances where bear flags formed in this most recent downtrend, right? So if we look at this move right here, we look at this big pull, clearly a pull, right? Big impulse to the downside. And then we had a bear flag that was forming right here, but it was invalidated. So what does that mean? So it means that we were expecting continuation, meaning the trend was down. We saw a bear flag forming here because, again, price offered more selling pressure, but instead of breaking down further, price invalidated this structure. It moved higher. So when we see these structures, again, the anticipation and the expectation should be continuation, because you don't want to trade against the trend. As soon as you start trading against the trend, you think that you are playing God, and you think that you are smarter than these banks and institutions, and we are not. I am not. I've been doing this for 6 years, and I am not smarter than these banks and institutions. They will wipe you out. So the expectation should be continuation. But when we saw this invalidation here, and this violation of this structure, and we saw this breakout to the upside, and now that we're trading slightly above these lows over here, there is a possibility that the trend will reverse from here. So again, what we want to see is a further break to the upside, right? We want to make another high above this high over here to show us that this trend is truly going to change, because otherwise this was just a retest of the high that was set over here, right? So this could be a test here. This could have been a test here. We could see a rejection, and we could see price continue much lower from here if price is unable to reclaim a higher high. So good question, though. There's plenty of bear flags all over on Bitcoin and other assets when you look on smaller time frames. But it's just one of the things that you guys can look at, right? So we can look at a lot of different things. We can look at double bottoms. We can look at double tops. We can look at support and resistance. And support and resistance outside of these market structures is going to be one of the most important things you guys can learn, because support and resistance is what make up the market. So again, a support level is where a lot of buyers are stepping in, and there's not enough bearish pressure to pull price lower. So we can see in this area here at $45,700, there's a lot of support in this area here. Price, there's not a lot of sellers here. There's not a lot of strength to be able to pull price lower. And resistance is when price has a difficult time breaking above an area, and is basically, imagine like you're jumping up and down on a trampoline. You're trying to break through, but you keep hitting your head. That's resistance. And support, again, is when you're jumping on the trampoline and you're not falling through the bottom of the trampoline, and you're able to maintain that level. So when you take market structures and identifying the trend, you combine that with support and resistance. And again, when you guys learn the Fibonacci's and use those Fibonacci tools, it's going to bring it all together for you guys. The Fibonacci's do almost all the work, for the most part, of identifying major support and resistance levels in areas that price is likely to retrace to. Again, if you guys haven't checked out the Fibonacci Masterclass, make sure you guys check that out. We do example after example after example of how to use Fibonacci's, how to use them in both uptrends and downtrends, and how to use them for both entering your trades as well as exiting your trades, because those are the two biggest questions that most people have, right? All of this can seem great and dandy, identifying the trend, finding the patterns, all this great stuff, but none of it matters unless you're able to find a good entry point and an excellent exit point, and you're able to both execute on both of those according to plan, right? Because we can create all the plans that we want. We can say, oh, well, I'm going to buy this asset at this price if it comes here, and I'm going to sell it at this price. But if you guys don't stick to that plan and execute that plan, unfortunately, it's all gone to waste, right? You can do all the analysis in the world, but you got to stick to your plan. All right. You guys have any questions on this? Okay. We're going to go ahead and look for a pattern. I think I found a really obvious one in 2020 for you guys that will show off this pattern here. And this is going to be a head and shoulder pattern. So this is something that usually marks the top of an uptrend or the bottom of a downtrend, just depending on where we are with it. Boom, here we go. So in 2020, I'm going to pull this out to a bigger time frame here. All right, here we go. I'm going to go back to 2020. And it's right here. So there's something called a head and shoulder pattern. And this is a super classic pattern that you'll find everywhere. You'll find it in foreign exchange. You'll find it in precious metals. You'll find it in the stock market. There isn't a market that doesn't offer this structure. So when you find a standard head and shoulder pattern, it generally marks the top of an uptrend. So we see continuation, right? So we see, in this instance from, late 2019 all the way through February, we saw that there was a clear uptrend forming, right? Higher highs and higher lows. We can see that there were multiple flags that formed here, right? We can see the flags that formed here, suggesting continuation, right? And that's what we got here, was we got a continuation of this bullish trend to the upside. Now, when we saw this pattern form here, and most traders won't see it, including myself, until most of the patterns formed, and you won't be able to confirm that that is the pattern until it's kind of completed itself as a head and shoulders pattern. So we can see that it's exactly as it sounds. So you can see that there's the left shoulder right here. We can see that there is a head up here, and we can see there is a right shoulder over here. Now, they don't have to be symmetrical. The left shoulder can be higher than the right shoulder can be higher than the left shoulder. The main rule about this is that the left or right shoulder cannot go over the top of the head. If the right or the left shoulder exceeds the head and goes higher, well, now we most likely have trend continuation and not a head and shoulders pattern. And that's important because you're looking for the head and shoulder pattern to show you that the uptrend is coming to an end and that price is going to most likely reverse and offer some selling. So we have, again, I'm going to type this out for you guys here. So we're going to do LS for left shoulder. We're going to do head up here. Okay. And then we're going to go ahead and do our right shoulder, RS for right shoulder. The last component to this is, after you guys can kind of see this structure forming here, we've got the left shoulder that formed, we got the head, and we have the right shoulder is the neckline that comes in. So the neckline is going to most likely sit somewhere around here. And you can see how price, came down. You could really, even if you wanted to, consider this entire area here, the entire left shoulder, but for just the sake of this example, we'll call this area right here the left shoulder. So once we see price come back down in the right shoulder form, so we saw the right shoulder form, this is where most traders will look to enter a head and shoulders pattern to the downside. So they want to see some sort of retest, where we saw right here, confirm that the right shoulder was formed. And then when you see the break of the neckline, that's the confirmation that the head and shoulders pattern is going to continue even further to the downside. When you see a big, strong break like this to the downside. And in fact, this exceeded most traders' expectations and really doubled down, going much, much further to the downside. So you can see these at the top of uptrends, but you can also find these at the bottom of a downtrend. So again, if I can find another example of this, but if we just flip this inside out, we would be looking for something like this to be found at the bottom of a downtrend. So you could see that there was a left shoulder that formed, the head, and then the right shoulder, and then we had the breakout to the upside. So you guys can look for these patterns in both directions, right? When we look at any of these patterns, whether it's a bull flag, bear flag, head and shoulders, inverse head and shoulders, flag patterns, pennant patterns, wedges, it doesn't matter. You can look for them in both directions, but when you spot one in that direction, especially on a higher time frame, your initial expectation should always be, we are going to continue in that direction until I am proven otherwise. Because the second you try to consistently bet against the house and bet against the trend, you will lose more money than you will ever expect to have lost. And I can tell you that from trading foreign exchange. These markets will move in such enticing ways to make you think that you can counter trend trade, meaning that if you see there's a clear, strong uptrend forming, that you can make millions of dollars or tons of money trading the opposite direction. You have to remember that when a trend is forming, that means that price is moving more aggressively in that direction. So if we're in an uptrend, that means that we're getting larger candles in the upwards direction. So that means that the greater reward comes with trading with the direction of the overall trend. Now, that doesn't mean that there isn't money to be made by trading counter trend or trading against the trend, but it means that you're taking one of those probabilities out of your basket. And your goal is to put as many probabilities as you possibly can in your basket of, hey, this is the trade. Here's where I think I want to enter. Here's where I think I want to exit. Am I trading with the trend? As soon as the answer is no, you are taking away so much probability out of your trading. Okay. So I know this was a lot for a lot of you guys who have not been with us, especially some of you guys who are not as, technically savvy. Maybe you're getting just into cryptocurrency, and that's perfectly fine. This stuff takes practice. It takes time. Again, I didn't learn this overnight. Overall, to kind of, really sharpen a lot of my trading, I've been practicing for just about 6 years. And I think if we look at, most professions out there, even we look at, medical, anything out there, law, they always call it a practice. And that's just because everything takes consistency and practice over and over and over again. Getting intimate with the charts, understanding and learning these trading tools a little bit will help you understand kind of where we're going and, where price is likely to retrace to before moving higher. So I want to go ahead and just remind you guys what we talked about today. We talked about time frames and the value of a top-down analysis. So again, always start with a higher time frame. We want to start with something like a weekly chart or a daily chart in order to look at an asset, whether it's a coin or an asset or a security. We want to start with a large time frame and move our way down. When we're identifying the trend, we want to see an uptrend, higher highs and higher lows. We want to see price continuously moving up. Even if there's a pullback, we want to make sure that that low that was set is higher than the previous low. And again, in a downtrend, we want to see a series of lower highs and lower lows. And that tells us that price is likely to continue in a downward fashion. Identifying the trend is very important. When we're using trend lines, we want to see at least 3 or more touches to make sure that a trend line is valid. However, when you see 2 good touches on a trend line or 2 areas where price either made a higher high or a higher low or a lower high and a lower low, you can go ahead and slap a line on it and see if that trend is going to become valid. Excuse me. And you can watch for breakouts on either side of those trend lines to help you better understand where price is likely to go next. And you can use flag and pennant patterns to show you continuation. So again, when we see a big impulsive move in one direction, whether it be bullish or bearish, you want to try to enter that trend that's already in motion by waiting for some sort of consolidation period to show you that price is going to move higher. And those structures can help you give you a good indicator of where price is likely to continue. And of course, these head and shoulders patterns, these are going to be a little bit trickier to understand. And that's just the reality of it because they can be so asymmetrical. Trend lines are a lot easier to work with because they're very linear. They're one of the easiest tools to work with. I recommend you guys start with the trend lines. Head and shoulders can be a little bit subjective, but once you guys start spotting them, it's really hard to unsee them on the charts. So again, with all of these technical indicators, you guys just need to spend time with them, work with the easier ones. Once you master the easier ones, work down to the more difficult ones. But let's go ahead and let's see if you guys have any questions on this stuff. Sean Urain, really great info. Thank you for making this complex topic easy to understand. Awesome. My pleasure, Sean. And again, this is something we plan on continuing with CryptoCharged, to do these masterclasses at least once a month. If you guys are already a CryptoCharged member, you guys already know that we do this, basically 5 days a week, give you guys a little taste of what we see in the charts. But we want to do these at least once a month where we give you guys that technical overlook and give you guys that fishing rod for yourself. Because again, our goal is not to have you guys be a subscriber forever because you need us to do the technicals for you. We want to provide you with the leg up, give you a leg up on the research, a leg up on the technicals, and for you to be able to take that and validate it for yourself. Because honestly, I can tell you it is the greatest reward of all is to be able to do your own charting and be confident in your own charting because, you truly have the keys to your own success at that point. A cheat sheet would be awesome to remember all this valuable info. Single page member, maybe yes. So I actually am working on a pre-trade checklist actually. So I have one already made. Our producer Gavin loves it. He's a big fan of this checklist that I made, but I want to simplify it a little bit for you guys to cover some of these rules, I guess, rules that I have for my own trading. And it's important to have rules for your own trading because if you don't, you're just going to make willy-nilly decisions. You need to have concrete rules that you can even check off on a checklist. and those are gonna be helpful. So that's definitely something that's coming, and something that I'm working on. I just want to make sure that it's, really top notch for you guys, and it's really going to help you out. So um, let's go ahead and do a quick little tour of CryptoCharged for those of us who are not CryptoCharged members, or if you are a CryptoCharged member and you're not really sure about everything we offer. I want to show you guys everything so that you guys are maximizing your membership. Okay, so um, what we do 5 days a week, Monday through Friday, is a daily update video. So we show you guys, again, the technicals, we show you guys the key news, we show you guys some on-chain data. So one of our partners and analyst, Dan Habib, he does on-chain metrics, which is a super unique metric that shows, basically what certain cohorts of individuals are doing with their Bitcoin, and it gives us a better indicator of what might happen with price in the future. And we do a lot of great stuff on the show. We bring on guests sometimes. Okay, we have our technical analysis section. So what I do in here for you guys is, again, Monday through Friday, 5 days a week, I give you guys a Bitcoin update, I give you an Ethereum update, an XRP update, and then we also have over 25 different altcoins separated by market cap, where we give you a quick sentence of what's going on. We tell you where you can potentially enter the asset. We show you where you could potentially exit and where you can buy it. So we really try to make this extremely simple for you guys. We also have a learning center here. So we have basically highlights that come out of our daily updates. And our producer Gavin goes through and edits these and makes a compressed highlight from the top clips of the week. So you guys, if you don't have time to watch all of the daily updates, you can go ahead and just check out the most recent. Additionally, with our learning center, we cover all the basics for you guys. So we have, if you want to learn about what blockchain technology as a whole, we have, a section for tokenomics and blockchain. We have one for core crypto concepts, so you guys can learn all that core stuff. But if you guys aren't interested in that quite yet, you can jump right over the how to buy crypto section. We show you everything, including a walkthrough of every exchange that we recommend, including some of the documents, covering cold wallets. We even have, again, if you guys want to get deeper with the technical analysis stuff, we have everything from intro to candlesticks, moving averages, support and resistance, those Fibonacci's we were talking about, head and shoulder patterns. So you guys can find multiple examples of this. And then the weekly wrap-up report is also something that comes out every Saturday. So we give you the top 3 news articles with links back to the news articles that we published. You get a Bitcoin technical recap for the week, and Ethereum, and then we also do the project breakdowns, where we give just a very quick explanation of what we talked about during that day with a link back to everything, so you guys can decide what you want to go through, again, if you are limited on time. Something we most recently added is our portfolio review. So we want to put our money where our mouths are. We're showing you guys what we own by asset, our top 10 assets by percentage. You can go through Brian's, Dan's, and myself's. We all allocate our assets a little bit differently. Additionally, we also just opened a CryptoCharged portfolio with about $10,000 in it. We opened about 9,000 of that $10,000 in positions. And that's going to be added here next week. So you guys are able to track that portfolio alongside with us. And we're going to be doing a lot of upgrades to this site throughout these next few months here. You guys are going to love a lot of the stuff we're bringing on. We're going to bring on a coin gallery, so you guys will be able to see, basically like a baseball card style thing of each coin. So you'll be able to see, our exits and entries. You'll be able to learn a little bit about the coin, see where it's traded, see where to earn interest, all those goodies. So I really appreciate you guys all coming to this webinar today. I hope that you guys took away something and learned something today from this. Again, remember, education is a process, right? It's not an overnight transformation. Anything that is worth learning and mastering takes time and practice. So I really hope that you guys, continue to push yourselves and take 2022 and make it your year. I promise you, if you start today and you look in December, December 31st, 2022, you will be amazed with how far you have taken your education. Honestly, ask any member that we have now that's even been with us for just a couple of months. Most of them feel so much more confident. They understand, one, what they're investing in, because if you don't understand what you're investing in, there's really no point. You need to understand the technology we're investing in, and that's part of what we do in these daily updates. We give you bite-sized information about what we're investing in and why we're investing in it, and then we also make the strong technical case for why we're entering an asset and why we're exiting an asset at certain prices. A lot of sites will go out there, and a lot of groups, a lot of Telegram groups, Discord groups, and all they give you is entries and exits, and you're expected to trust them and follow them blindly. And we want the exact opposite for you guys. We want you guys to be able to make decisions for yourselves based on the information that we give you, and be able to be a little bit more educated about it. So again, thank you guys so much for joining here today. If you guys aren't a member, you guys can try it out for 7 days free. We still have our special launch pricing in effect, so make sure you check that out. And until next time, Happy New Year, everyone. And thank you.